The stock market is a platform where shares of publicly traded companies are bought and sold. When you buy a stock, you are buying a small piece of ownership in the company. The value of a stock is determined by the performance of the company and the demand for its shares among investors. Companies use the stock market to raise capital by issuing and selling shares to the public. Investors can make money from the stock market by buying shares at a low price and selling them at a higher price, or by receiving dividends from the company. The stock market can also be a tool for companies to raise money for expansion and growth, and for investors to earn returns on their investments. Investing in the stock market carries certain risks. Some of the main risks include market risk. The value of stocks can fluctuate widely due to changes in the overall economy, political events, natural disasters, and other factors. This can result in losses for investors. Company-specific risk. The performance of a specific company can also affect the value of its stock. Factors such as poor management, changes in consumer demand, or increased competition can all negatively impact a company's stock price. Interest rate risk. Interest rate changes can also affect the value of stocks, since stocks compete with bonds for investors' money. When interest rates rise, bonds may become more attractive to investors, which can cause stock prices to fall. Thanks for tuning in. We hope you found this video informative and helpful in understanding the stock market. Remember to always do your own research and consult with a financial advisor before making any investment decisions. Don't forget to subscribe to our channel for more stock market analysis and updates. Thanks for watching, and we'll see you in our next video.